Think paying LMI is like throwing money down the drain? Be honest, how many of you have delayed buying because of that one extra cost? What if I told you LMI could actually be the secret weapon most Australians overlook? Whether you're saving for your first home or building an investment portfolio, LMI could fast track your property goals if you know how to use it strategically. Good question. Have you ever wondered how much faster you could buy if you didn't need that full 20% deposit? Stick with me and let's figure this out together. By the end of this video, you'll understand everything about LMI. How does it work? Who should consider it? And why would it be one of the best decisions you ever make? Plus, I'll share insider tips like choosing the right loan to value ratio or deciding whether to pay LMI upfront or add it to your home loan. And here's a bonus. I'll show you how to make LMI a part of your bigger financial freedom plan. You don't want to miss this out. Hi, I'm Rasti Vaibhav, founder of Gateway Properties, finalist for the 2025 REB Buyers Agency of the Year, and a multi-award winning agency with over $200 million worth of properties purchased for our clients. At Gateway Properties, we have helped Australians from all walks of life navigate complex property decisions. Whether it's buying your first home or scaling up your portfolio, we have guided countless clients to avoid costly mistakes and unlock real financial growth. Let's face it, saving a 20% deposit can feel like climbing Everest without oxygen. On a $750,000 property, you're looking at $150,000 just for the deposit. Not to mention fees like stamp duty and legal costs. It's no wonder so many Aussies feel stuck on the sidelines. But here's the good news. Waiting isn't your only option. What if you could get into the property market now and start building equity while property prices continue to rise? That's where lender's mortgage insurance, or LMI in short, comes into play. But should you pay it or should you wait? That's a big question. LMI is a one-off premium you pay when your deposit is less than 20% of the property value. And here's the twist. It's not insurance for you, it's insurance for the lender to protect them if you can't repay your loan. Now, I know what you are thinking. Why would I want to pay for lender's protection? Because it's what allows you to buy with as little as a 5% or 10% deposit. And in a market like Australia, where property prices grow by 5% or more each year, buying sooner can often mean getting ahead faster. Before we go further, I want to be clear, the information in this video is general in nature. Every financial journey is unique, and what works for one person might not work for another. That's why we work closely with trusted mortgage brokers to help you find the best path forward, whether it's exploring loan options, calculating LMI costs, or structuring your finances. We make sure every step aligns with your goals and circumstances. Now, let's talk about an important decision. Should you pay LMI upfront or add it to your home loan? Paying upfront is the cheapest option because you avoid paying interest on the premium. But let's be real. Most buyers roll it into their home loan to spread the cost over 25 or 30 years. The downside, you'll end up paying interest on the LMI as well as your loan, increasing the total cost. So how do you balance this? If you're adding LMI to your loan, make sure you're using an offset account. By depositing your salary and savings into the offset account, you'll reduce the interest on your loan while keeping your funds accessible. For those unaware, an offset account is a savings or transaction account linked to your loan. And the balance in the account offsets the amount of your loan used to calculate interest. For example, if you have a $700,000 loan and $50,000 in your offset account, you'll only pay interest on $650,000. It's a simple strategy that can save you thousands in the long run while giving you financial flexibility. Here's a question you might not have considered. Does paying LMI make sense even if you have already saved a 20% deposit? Surprisingly, yes. Keeping some of that cash in your offset account can give you a buffer for emergencies or the flexibility to jump on new opportunities. For example, imagine you're buying a $700,000 property. Instead of using 20% as in $140,000 for the deposit, you put down 10% as in $70,000 and keep the rest in an offset account. At a 5% loan interest rate, that offset could save you $3,500 annually on repayments while keeping your cash accessible. This approach also allows you to focus on higher growth properties without stretching your budget too thin. Now, did you know that LMI premiums vary significantly between lenders? Here's something most people get wrong. They assume all lenders charge similar LMI premiums. But on a $400,000 home loan at 90% LVR, a major bank might charge $5,840, while a smaller non-bank lender charge closer to $7,800. That's nearly a $2,000 difference. Money that could go toward minor renovations, your offset account, or even furniture for your new place. This is why it's so important to compare lenders. At Getaway Properties, we don't just help you find the right property, we work hand in hand with trusted mortgage brokers to uncover the best financial solutions for your unique goals. Whether it's securing a lower LMI premium, optimizing your loan structure, or setting up an offset account, we ensure every decision is part of a strategic plan tailored to you. Let me share a pro tip. Instead of borrowing at a 90% LVR, consider borrowing at 88%. Why? Because LMI costs increase exponentially beyond 90%. Borrowing at 88% can significantly reduce your premium while keeping your deposit manageable. Let's break it down. On a property worth $700,000, the LMI at 90% might cost around $18,000. But at 88%, it could drop to $14,000. That's a $4,000 saving just by adjusting your LVR by 2%. This minor tweak doesn't just save money up front, it frees up cash for emergencies or even furnishing for your new home. And if you're an investor, here's something even more exciting. LMI is tax deductible over 5 years. Let's say your LMI premium is $17,000. That's $3,400 annually that you can claim as a deduction, improving your cash flow. One of our clients, John, leveraged this strategy to buy in a high-growth suburb in Brisbane's outer ring. By entering the market with a 10% deposit and leveraging LMI, John's property grew by $150,000 in just 2 years. That equity is now funding his next investment in a dual income property. A perfect example of how LMI can unlock opportunities faster. Of course, no decision is without risks. One concern many buyers have is negative equity. What if the market dips after you buy? That's a fair question. And it's why buying in the right location is so critical. At Getaway Properties, we specialize in identifying high demand, high growth areas to minimize risks and maximize opportunities. If you're worried about managing market volatility, check out our video, Risks in Property Investing. I'll link it at the end. Let's break it down with a real-world comparison. Scenario 1, you wait 3 years to save a 20% deposit on a $750,000 property. By then, if the market goes at 5% annually, that property's value will have increased to over $870,000. You'll need an extra $24,000 just to catch up. Scenario 2, you buy now with a 10% deposit and pay $18,000 in LMI. In 3 years, your property could grow by over $120,000 in value. That's the power of acting strategically. Let's settle the debate. Are you team save for 20% or team pay it and buy sooner? Drop your thoughts in the comments. I'm curious to see where most of you stand. And if you found this video helpful, share it with a friend who's also on the fence about LMI. Let's help more Aussies make smarter property decisions together. Still unsure whether to pay LMI or wait? Well, don't wait. Property markets move fast. And every day could mean missed growth opportunities. Book a free strategy call with me today, and let's create a tailored roadmap to fast-track your property goals. During the call, we'll analyze your financial situation, explore strategies like LMI and offset accounts, and map out how to maximize your buying power. Spots are limited, so secure your session now and start your journey to property success. Check out our video, 7 Steps to Financial Freedom, which is now linked on the end screen. Let's get you on the path to property success.